All right, welcome. Let's talk about what's going on in the markets because, wow, things are getting confusing. You've got software stocks crashing, Bitcoin taking a dive, and at the same time, gold is spiking. So, what is the real story here? Is this the big one we've been waiting for, or is it all just noise? Let's sift through it and find out.
So here it is, the big question, right? The one everybody's asking. After this incredible run we've had since late 2022, are we finally at the end of the road for this bull market? I mean, some of the recent data has people seriously spooked, and you can't really blame them.
So let's break it down. You look one way, and software stocks, basically the engine of our modern economy, are in an absolute freefall. You look another way, Bitcoin's plummeting. And then, wait a minute, gold, the classic safe haven, is surging? You can see why this is whipping up some serious fear and an extremely bearish mood across the board.
All right, first up, let's dig into the software sector. There is a real panic going on here, and it's all being driven by fears of massive disruption and what the future holds. So the question is, are we looking at another dot-com bust, or is something else happening?
You know, a huge piece of this is just psychology. If you were around for the dot-com bubble, this probably feels like a bad case of déjà vu. People are watching these companies that seemed invincible get absolutely hammered, and they're jumping to the worst-case scenario, a total wipeout.
Okay, so let's get a little technical for a second, but stick with me. We're looking at the software ETF, ticker IGV. Think of it as a report card for the entire industry. Right now, it's testing a really important historical support zone between 77 and 85. That's a price range where, in the past, buyers have always shown up and said, okay, that's cheap enough. But, and this is a big but, we just slipped below a key level, 79.35. That's not a good sign. For things to even begin to look better, we've got to get back above 87. The takeaway here? A real bottom isn't going to happen overnight. This kind of damage takes time to heal.
All right, let's switch gears and talk about the next piece of this puzzle, Bitcoin. Now, on the surface, this looks really bad. It seems like another crisis of confidence. But if you dig just a little bit deeper, you find a completely different story unfolding. So the fear, the headline you're probably seeing, is that Bitcoin has failed, that it's not a real store of value, the whole experiment is over. But the reality is way more interesting. Bitcoin was actually doing its job, just maybe not the job everyone expected. It became a financial lifeline, a source of emergency cash for companies that were getting cut off from everywhere else.
So check this out. Here's how it all went down. Step 1. A credit crunch hits the software sector. Banks got super nervous and turned off the money spigot. Step 2. Suddenly, these companies can't get loans. They're blocked. So what happens next? Step 3. They scramble. They look at their assets and say, what can we sell right now for cash? And for a lot of them, the answer was Bitcoin.
And this quote just nails it. The drop wasn't about people losing faith in Bitcoin. It was about hyper-weak hands. Companies that were on the ropes, totally desperate for cash just to stay afloat. And in a weird way, this whole episode actually proved one of Bitcoin's key features. You can sell it and get cash fast when you really need it.
And here's a perfect real-world example of this. There was this one mining company that decided to branch out into AI. Well, they needed cash, and they needed it badly, to fund all that new computing gear. So what they do? They dumped their entire stash, 2,000 Bitcoin, in just 8 weeks. And now, they're being forced to take on really expensive debt, which just goes to show you how completely they've been shut out of normal financing.
Okay, let's recap. The software and Bitcoin sell-offs, it's really a story about a very specific credit crunch, not the whole market falling apart. So with that in mind, let's zoom it back out and revisit that big question. Is the bull market still intact?
Now this is where it gets really interesting. If you look at the S&P 500 you always hear about, the one dominated by a few giant tech companies, yeah, it looks shaky. But what if you look at an equal weight version, where every company, big or small, gets the same vote? Well, that chart tells a totally different story. The uptrend is still going strong. It shows that the problem isn't the whole market, it's just concentrated in those big, struggling sectors.
So if tech isn't the real villain here, what is? What's the one thing that can actually kill a bull market? Well, here it is. Liquidity withdrawal. See, bull markets don't just die of old age. They get taken out back by the Federal Reserve. When the Fed starts pulling money out of the system, making it harder and more expensive to borrow, that's when the music stops. Period.
So the big question is the Fed doing that now? Are they pulling liquidity? Well, all signs point to no. Just look at this. It shows the extra interest, the risk premium that investors demand to lend to riskier companies. When money gets tight, that number skyrockets. But look, it's still falling. That's a huge, flashing green light that says liquidity is still abundant in the system.
Okay,
So the immediate picture looks pretty stable, but don't get too comfortable, because there's a huge storm brewing on the horizon, a hidden risk that could eventually change everything we've just talked about.
So here's the story. Some really big corporations, we're talking giants like FedEx, have started suing the US government. Why? They want their money back. Billions of dollars they paid in tariffs that have now been ruled illegal.
And believe me, FedEx is just the first domino. You can bet Costco is next, and then hundreds, maybe even 1,000 other big companies will line up right behind them. And that's just the big guys. All told, you could be looking at something like 300,000 businesses wanting a refund. The scale here is just mind-boggling. So what's the price tag for all this? A cool $600 billion. That's the potential hole this could blow in the U.S. budget over the next decade. To give you some perspective, that is a staggering amount of money. It means a bigger deficit and a lot more government borrowing down the road.
Okay, let's pull all these threads together. It's time to separate the signal from the noise, because this is really a tale of two different things. What you need to focus on right now versus what you absolutely need to have on your radar for the future.
So what's the bottom line here? First, all that panic you're seeing in tech and Bitcoin, that's the noise. It's a very specific, contained problem, not the whole market collapsing. The bigger trend, for now, is still strong because there's plenty of liquidity. But the real signal, the one you can't ignore, is this looming fiscal crisis. It's a huge red flag that the system itself has some serious cracks, and that means you've got to be smart, you've got to be strategic.
And that leaves us with one final, crucial question. If the market is okay for now, but the long-term government finances are, well, looking broken, where do you go for safety? In a world with more and more debt and instability, what is the real safe haven? That's the question we all need to be asking ourselves.